Well, it was another one of these rollicky sessions for social media stocks as Facebook continued to stumble over an explanation over the way it's handled customer data and even a potential personnel change there. People just don't know what the heck is going on. And then this Twitter kind of lost in all the headlines. They face their own issues today as the Israeli justice minister issued a statement that, quote, terror groups have switched to Twitter because Facebook cooperates with Israel. That stock actually took a bigger percentage hit. Now, for that reason, there's a bill in Israel that would actually allow authorities there to remove social media content. So while those stocks were dominating the headlines, investors still stuck with technology. They just shifted over. They went to software and semiconductor names. On the software side, Adobe, Red Hat had a very good session. Semiconductors, NVIDIA, and IPGP both really up big. Then, of course, there's Amazon. It just remains in a lane of its own, zooming ahead, always looking ahead with new highs in sight. But overall, consumer discretionary was strong, too, in this session. In fact, there were a few names that have recently were thought to be on their way out. Now they're moving toward new highs. You got Best Buy, Tapestry, which, by the way, I thought the name was really corny. This is the old a Coach. They call it Tapestry now. But I tell you what, since they changed the name, the stock has been on fire. Industrial names also enjoyed a pretty good session. Dover was up. Boeing had a real great day for a company that's going to get hurt by tariffs. After the close, FedEx posted revenues of $16.5 billion. The street was looking for $16.16 billion. Earnings $3.72 against $3.11. And management offered pretty strong guidance. Initially, the stock was up like $11, so something didn't go right on the call because, as you can see, it is coming down. Of course, tomorrow it's all about the FOMC decision and the maiden question and answer period for Jerome Powell. The street currently looking for a 25 basis point hike now and at least 2 more this year. I think it can handle 4, of course, if the data is right. But more importantly, if the Fed is careful not to sort of admit they're going to do 4 before there are any signs of evidence of inflation. Let's talk now about the Fed and the market with Jeffrey Cleveland, the chief economist at Payden Rygel. Jeffrey,
hi, Charles.
How you doing, buddy? Listen, everybody's concerned.
Doing well.
What I found fascinating is Jerome Powell's been around for a long time. He's been involved with the Federal Reserve for a long time. Before that, he was with the Carlyle Group.
Treasury.
But now he's a big mystery. He's a big question mark. All of a sudden, this guy who was known as a dove, people are thinking he's got these talons and he's the ultimate hawk.
Well, I don't think he's a hawk, but he has struck a different tone than we saw with Yellen, and I think it's a welcome tone. Instead of talking about headwinds that the U.S. economy faced, he's recognized that a lot of those headwinds have shifted to tailwinds. We've got a fiscal policy boost. We've got the global economy firing on virtually all cylinders. We think we'll see global growth top 4% this year, Charles. So that's a good set of tailwinds for U.S. growth. So that's the tone he came out with at the congressional testimony, right. And I think we'll hear more of that tomorrow.
But, Jeffrey, he's got to have to be careful not to spook the market, right? In other words, he's optimistic and maybe, will he see inflation? How does he articulate that, hey, I'm with you, I'm not going to ruin the party, and I'm only going to do what I have to do?
Well, I think the market now has adjusted to the 3 rate hike scenario. That's almost fully priced in. What's not priced in, Charles, is a 4 rate hike scenario. I think at the start of the year that was seen as a very far-fetched scenario. Maybe it's got a 1/3 chance now in the eyes of the financial market. So he could just stick to the 3 hikes, and I don't think that spooks the market. If he does introduce the idea of 4. Or, Charles, if we are going to see tomorrow not just Jerome Powell speak, but we'll see new economic projections from the full FOMC. So you'll see all those dots. And if those dots, the median member sees 4 rate hikes this year, that's not priced in. That could cause some volatility.
Right. All right. Jeffrey Cleveland, as usual. Thanks a lot. Great stuff.